Hello friends, welcome back. Let's take a look at Ethereum together. So in the previous videos, if I just undo a few times, I was deleting them there a second ago thinking, no, we don't need this anymore, but might as well leave it on for now. We had a descending broadening wedge here, and they were asking a couple of questions about it. Is this descending broadening wedge going to be broken at this point here, or will the prices go back down towards the lower side essentially? Breaking above this line here is going to be quite bullish, and it would take us up towards our next target here at 215, 216 area. And could we make it up as high as 220? Bit of a tough one that. Certainly thought that the 225 and 230 are out of reach just now in terms of the exact immediacy of things, but they're within sort of comprehension really overall if we were to just kind of think about this in terms of sort of just looking at this for an overall breakout from this thing. So is that still in play? That's still in play. That's still an option. If we look down the time frames as well towards the lower sides, you know, down the way, just briefly show you on screen, even though I'm not really going to point at anything. You can see there in the 12 and the 4 hours that there's no divergence on this recent upward aspect. But if we look over towards the 1 hour time frame, you can see that there's been a bit of divergence here, or a bit of divergence here. Looking at the tops, just here, is that right? Is that right? Am I saying that right? Give me a second. No, so really it's just been going along fine really for now. In terms of looking at the lows in this, then you can see that these have all come lower as this is a bit sidewaysy and lower here than it is here. So maybe you've got hidden bullish divergence. If the trend continues towards the upside, then maybe that's the sort of thing that could give us a little bit of strength in the lower time frames to do that with. I'm not particularly bothered about that at the minute. What do we see here if we go up to the 12 hours as well, that we're breaking back into this area? You know, we've got this upward sloping previously in terms of this trend line. It could have been acting as resistance, and there we are, just kind of coming back into it again. It's easier to see, it's better positioned on the 24-hour time frame, you know, for instance. And if we got to the 2-day time frame where it lasted inside it for a bit longer, you know, it's still looking like we've just broken out of it on both of these, and I don't need that one there anymore. Remove. As you can see, we got our sort of measured move type crap off of that. And yeah, so everything's kind of going along healthy enough as it stands at the minute. So that's good to see, just as a general sort of quick health check on this thing. Now, let's take this thing off here because that is definitely influenced our thinking and isn't a necessity. We can leave this on for just now, I suppose, but this measured move also has given us a little bit of influence over our thinking, which we don't really necessarily need. As we know, we've got these lines here, 220, 225, 230. They're the key areas for us. And we can ask this question, can we break back into this upward sloping trend line that we had here at the lower side here? Now this is on linear as I want it to be, and I'm just going to just adjust this. Like I haven't really adjusted this very much for quite a while. I'm just going to adjust it, try and include a few more of these bottoms here, and instead of having it actually even as an upward wedge, which we need to break back into to be bullish, blah blah blah, I'm just going to actually expand it out the way and say, oh my god, this what was previously a narrowing wedge thing, which had a fake out and then broke back into and then broke out below hand, well, blah blah, all that super exciting. If you were part of the channel, you saw it all happen right in front of your very eyes. With that there thing, which was previously a rising wedge, has now turned into an ascending, broadening wedge. Oh my god! And that's the sort of thing that happens with wedges all the time. So you know, a rising wedge can turn into a channel easily enough, which can then go on to turn into a descending, broadening wedge. And you know what else? There's something else that you probably will be seeing people talking about in the world at the minute is, sorry, quick cut there. I was going to say, oh, you can imagine people drawing on a big triangle around this. Nah, you can't really. There's not enough for that. That would just be very silly. So yeah. Anyway, what are we really looking at? If we just clear off all the drawings off of this thing and just kind of give a quick couple of reminders. You know, over here on the 24-hour time frame, we have this, which could potentially be considered to be a death cross. Now, this is using the traditional market numbers. Well, it's actually using an analog of the 50 and the 200 for a market which is open at weekends. So I'm using the 70 and the 280. But I change it back to what the traditional world uses of 50 and 200, which of course is hard to fit it on exactly onto this world where, given that those are periods and we have weekends and they don't. Anyway, you can see that there was a golden cross just here. So there's a little bit of a contextual divergence in terms of the narrative going on here with this one. And just depending on what numbers used. Now we go back up to the 2-day, you can see that we've come up here. Ooh, we're so close. This is the 50 and 200 again, remember. So close to getting this cross and it got rejected there and it's kind of going down a bit here. Ooh. Going back 50 periods if people are interested as well from where we currently are. You can see right, so here these candles, price action above this area here is going to result in a downward slope on the 2-day here, you know, going back 50 days. Now if I just get rid of that again just to make this point again and just show you the dynamics between how this is kind of and what's currently interesting me about this thing, just so you can see, put it back to 280. Oh, look, we just had a 2-day sort of golden cross happen there on this one, which on the 24 hours is a death cross. Anyway, is it fair to think that these moving averages themselves, whatever kind of format that you're putting them in at, will get retested again in the future? Yeah, it is. So in the face of this bullish price action overall, I would like to stress that point, you know, just stress that. And if you look at this just like this here on logarithmic, as it happens, or in linear, but maybe it was maybe, you know, the same sort of difference. The chat that we had before could just be superimposed back on the chart again with this using the wicks instead, by the way, and asking the question with the descending broadening wedge. So we're not necessarily out of that world just yet, which I think is wise, kind of wise that I've taken it off for now, and instead we can just look at this green horizontal line here, and the question really becomes, you know, this is our line that we're looking to. If we can make it above this line, then that's all good. The next target's 220. We can make it above 222. That's quite good because then we'll start to get the upward slope on the, well, you know, if some people in the world might be looking at that moving average and there'll be an upward slope on it, but just whether or not you're looking for or confluence amongst sort of participants in the market, you're actually just using it to look at the trend, you know, then that would be a good area for it to be above in terms of the 2-day trend, 2-day and the trend, and to maintain itself above there. But you know, anyway, this general area is what we're looking at in terms of resistance. We can see that if we scroll out and put price action on the more price action on the charts, much more. That the going back all the way over here, let's stick it all on, shall we? There we go. There it's all on. Now it's all on the charts. Everything that BitMEX has ever done. You can see the VBVR drops off dramatically. So the price, you know, as you go up past these areas, and there's nothing up here. But if you look over to where the price action currently is, in around this area here, you can see that just here is like is really the last of the big bits of the big nodes, and you can see it drops right off there as well. So getting above the 230 area is obviously like the crucial sort of thing in terms of like the supply and demand. There's a lot less liquidity in this area than there will be until we get up into that zone, and that sort of starts at that 250 area. So, you know, that would obviously be a significant percentage move up when you're looking at the prices being at just around 200 at the minute. So there's plenty of trading to be had in the meantime up to them. But obviously in this area, I think it's kind of risky. This is where you'd be taking profit at there, and there on those 20, 25 and 230 areas. Should we actually make it above this 216 currently? And of course, if you're just playing support and resistance, the sort of most straightforward, and I'm not a financial advisor, none of what I do here is financial advice. Most straightforward move is to assume that the resistance would actually work in around that line, and you could maybe look for some sort of move down the way. You could even get a 10% move, and the 10% move would only constitute coming in here and setting in a higher low on this tentative new daily time frame upward trend that you could potentially start to be looking at if you consider this to be a low overall. And of course, going back to the chat that we had the other day, yesterday, in fact, you could in fact just overall ignore that as being the low, and you could think that anything even as far down as sort of the 185 area would be a higher low in terms of highs and lows and whatnot. I'd be very worried about the overall price action at that stage. Should it do any of that without actually opening and closing above this line first? Because if it does that without opening and closing up there, say it closes right where it is right now, for instance, then you're not, you know, you've got an equal high, but it's not higher than. Coming down here, you know, you could just be saying this is a downtrend at the minute and whatever, and be looking towards those things. And then of course, in terms of if this just, you know, fails before ever going up any higher and comes back down a bit more, then you'd be looking towards the lows during this, and there's no bullish divergence to be had, so that's kind of rubbish, you know. and this high and here, well, you know, you'd be having, if that fell down a bit, you'd be having a bit of the old hidden bearish divergence here on the stochastics, you know, which wouldn't be so great either. So that's why this area kind of becomes fairly crucial, and that's what I'm looking at over the next wee while. Thanks so much for tuning in. Really appreciate you joining me today, and I will catch you in the next episode. I've been Rocky Outcrop. You've been Rocky Outcrop. Hit that subscribe button. Do me a favor and grow the channel and all that good stuff. And thanks so much for tuning in.